Alcohol stocks have been struggling in recent years. Companies have more competition, including from non-alcoholic alternative beverages and cannabis. Even before the U.S. Surgeon General called for cancer warnings on alcohol, older drinkers were being replaced by younger people who drink less. President Trump's tariffs on aluminum and Canadian and Mexican imports have presented fresh challenges.
When you look at people who are 35 and below, only 62% are actually defined as drinkers. That is 10% down from 2 decades ago. So that's a pretty impressive number when you look at that typical heavy consumption segment now moving away from drinking.
Off-premise alcohol sales, which happen in stores and not bars and restaurants, fell nearly 1% last year to $112 billion. Volume fell across beer, wine, and spirits, excluding ready-to-drink cocktails and seltzers. Beer makes up more than 40% of the U.S. alcohol industry, and now Mexican imports, the strongest segment in the U.S. beer market, face a new threat from President Trump's tariffs. Constellation Brands imports and markets Modelo, Corona, and Pacifico, and saw its stock reach new highs in early 2024. Warren Buffett made a meaningful investment in the company in Q4 of 2024, worth more than $1 billion at the time, but the stock has tumbled so far this year.
For Constellation Brands, the Mexican import category is the biggest, best, fastest growing area of the entire U.S. beer industry right now, among the major segments of the U.S. beer industry. And they dominate there. Modelo Especial has now become the #1 beer brand in the U.S. by revenues. The problem they're facing is tariffs. So these tariffs on Mexican beers have really worried investors, and that's really impacted the stock. And it's making it very hard to forecast because it's impossible to tell how long these tariffs are going to come in, how long they'll stay. For us, we modeled out a full year of tariffs at 25%, and at current price levels, we still have double-digit upside on the stock.
Another potential performer is Anheuser-Busch InBev, which owns Corona globally, along with brands like Budweiser, Bud Light, and Michelob Ultra. But they and other canned beer makers face a headwind from Trump's aluminum tariffs.
I think that over the course of the last year, they've made great strides in terms of deleveraging the company further. They're getting close to the 2.5 times net debt to EBITDA. That is the ideal leverage ratio that they wanted to hit for the past 8 years. They're finally knocking at the door of that. The U.S. business for them has stabilized. Michelob Ultra is growing really strongly for them right now. But then internationally, they're doing much better in Latin America. You've got a business model that is really humming on the back of the digital transformation that they've been able to effect in Latin America. I think in Africa also, the business has turned around there for them as well. And so we're expecting better volumes, better revenues, and higher margins.
Meanwhile, with almost half of Americans reporting they are trying to drink less in 2025, a number that grows to 65% for Gen Z, non-alcoholic alternatives are becoming more sought after. But the average investor can't buy into the smaller specialty brands unless they buy shares of the large companies that invest in them. In September 2024, for example, Diageo announced it had acquired Ritual, a top zero-proof spirits brand.
It's very strange to go into a venue and not see a non-alc offering. And I think people are asking for them when they don't see them. We're looking at roughly an 18% growth rate over the next 4 years, getting the whole category to roughly $5 billion. Right now it's about $830 million. Non-alc spirits in particular are at $80 million, so you can do the growth trajectory up from there.
Non-alcoholic beer is the fastest growing segment of the beer market, and among makers, Athletic Brewing is the largest in the U.S. Keurig Dr. Pepper invested $50 million in the company in 2022.
Non-alcoholic beer is doing very well. It's over $1 billion category right now. It's growing very fast at a clip of more than 20% per annum. They're really building out the occasions that non-alcoholic beers fit into. The products taste good. They're appealing to consumers. It's a remarkable category.
Heineken, another major producer of non-alcoholic beer, reported sales of its Heineken 0.0 brand grew 10% last year. The company's stock remains volatile.
Heineken has struggled for growth in Europe, in Nigeria, in Vietnam, some of its major markets. And so that is why we're taking a more cautious stance toward Heineken. But Heineken's approach to Latin America has been fantastic. Its Mexico business is very strong. In Brazil, It's doing a remarkable job in the premium category and just above mainstream. The non-alcoholic beer category is an area where they started emphasizing earlier than most companies.
There are plenty of challenges ahead for beer and the broader U.S. alcohol industry. If it feels too risky to buy into right now, you can always grab a drink instead.